Hi, my name's David. I'm with Home Team Realty in Torrance. I made this video for first-time buyers to help give first-time buyers some insight into what they can expect when they buy a home. So I'm, I'm going to get started with the process, and it's going to be very detailed. Don't let it scare you. When you buy a home, you'll be having your agent helping you, guiding you through it, and an escrow officer and many other people involved in the transaction. There will be an escrow officer, a lender, an appraiser, your agent, the other agent, a home inspector, a home warranty person, a title company. And everybody does their jobs and works together to close the escrow. But there's just a few things that you should know, so I'm going to inform you and go over the process with you. The first thing we'll do is, I do anyways, is I have a short buyer interview with my clients. Just ask a few questions to get some information. One of the questions I would ask is, do you have a home you have to sell first before you can buy a new home? Basically, is your purchase contingent on selling another home? Because if it is, you need to get that home on the market. Okay, so basically, after your interview, the first step would be to get you qualified for a loan. So I would either refer you to a lender that I work with, or I would suggest maybe that you get pre-qualified with more than one lender. So you compare rates and terms. Then you're going to go ahead and pick the lender with the best interest rate terms. That's going to help you to get a much lower monthly payment. So some of the things to think about when you get qualified for a loan is what type of loan you're going to get. You're either going to get an FHA loan, a VA loan, a conventional loan, or possibly you might be one of those lucky people, be a cash buyer. If you're a cash buyer, you could have a 20-day escrow. But if you're getting a loan, a conventional loan, you'll most likely have a 30-day escrow. If you're doing FHA or VA, it may be 30 or 45 days. So you're going to get a lot of information from your lender when you get qualified for a loan. There's going to be things that are going to kind of affect what kind of loan you can get, such as your interest rate. Such as your FICO score. If you have a low FICO score, say a 650 FICO score or 630, you're going to be limited to getting an FHA loan, which there's nothing really wrong with that. FHA loans have good interest rates. On the other hand, if you have a high FICO score and you have a larger amount of money for a down payment, you may want to go with a conventional loan with 20% down so you can avoid paying private mortgage insurance and at the same time have a lower monthly payment. So you're going to find out all this information from your lender. So one of the first steps is getting pre-qualified for a loan. You want to call your lender or even two lenders and get qualified and compare rates and terms, pick the best one with the best interest rate and terms, lowest interest rate. Okay, so after you get qualified for a loan, the first thing we're going to do is start showing you homes. You're going to start looking for a property. So your agent will arrange showings for you, and those properties will either be vacant with a lockbox, which will be easy to show, or they may be appointment only. So you'll keep looking for homes till you find your dream home. Once you find your dream home, you're going to need to determine what offer price to offer. The way we do that is we check the comps. What comps are the recent sales of homes. We go back 2 to 3 months, or maybe 3 to 4 months, and we check what homes have sold for. And within about a mile of the subject property, of a similar square footage, bedrooms, baths, and then we add and subtract for upgrades and condition and location to determine the value, to determine if it's priced right. And we use that to help determine how to price a property, how to determine if it's priced right, and what offer price to write on it. All other things I think about when I'm writing an offer for a client is how bad does my client really want this property, and how many offers are on the property. Also, I'll call the listing agent and I'll ask the listing agent how many offers are on the property. I try to get some information from the listing agent to help to use that information to write the best offer. So at this point, we're competing with other offers. There could be multiple offers on the property, and you want to write the best offer on this property. And something to keep in mind is when you're writing an offer on a property, you're protected by the appraisal. So if you write an offer on a property and the appraisal doesn't come in at full purchase price, you don't have to buy the property. You can cancel, or the seller could come down to the appraised value. So you're protected by the appraisal. That's something to always remember. When you write an offer, you're protected by the appraisal. You can cancel and walk away, and or the seller could come down to the appraised value. Sometimes, on occasion, if a property is a really hot property and someone really wants it really bad, they'll pay the difference between the appraised value and the purchase price. But I don't see that happen that often. So let's say now I'm going on to the next step. You're writing your offers. You're in the negotiation stages after writing your offer, and you're competing with you're in the countering stages. So upon an accepted offer, after you've successfully negotiated your purchase agreement, you have an accepted offer. Upon accepted offer, you're going to be opening escrow. So after you open escrow, a copy of your purchase agreement is going to be sent to the escrow company. You're going to deliver your deposit to escrow. Also, a copy of the purchase agreement is going to be sent to your lender. Your lender is going to start working on your loan and processing your loan. You're going to fill out a loan application with your lender, and then your lender is going to order the appraisal. The appraisal is one of the things that every buyer has to pay for out of their pocket. Other things that you're going to pay for out of your pocket when you buy a home is your home inspection. Your home inspection and your appraisal, those are two of your main expenses when you first buy a home. Those things come out of your pocket. So let's go on to the next step. Upon opening escrow, the first thing that we're going to do is you're going to be scheduling your home inspection, or your agent will do that for you. So you'll be doing your home inspection, and during the first 17 days, you're going to be reviewing your disclosures. You're going to sign escrow instructions. You're going to review the title report and a natural hazard report. There's going to be an appraisal done. You're going to go over your home inspection report. You're going to make any requests for repairs or credits during this time. And then after that, this is the process of removing your contingencies. Contingencies are something that every home purchase is contingent on certain things. It's going to be contingent on your approval of the inspection. It's going to be contingent on appraisal. It needs to appraise the full purchase price. It's going to be contingent on approval of all the disclosures. The disclosures are provided by the seller. It's going to be contingent on approval of the title report. You're going to review the title. It's contingent on the loan. Every deal is contingent on the loan unless it's a cash offer. So during that time, you're going to remove all your contingencies one by one, or sometimes I'll encourage my clients to remove all their contingencies except the loan. And we leave the loan contingency in place until you get your loan documents, just to be safe. But sometimes you'll end up having to remove your loan contingency before you get your loan docs, and that may happen. Okay, so you're removing your contingencies. When you remove all contingencies, you're basically committing yourself. You're laying your deposit on the line when you remove all contingencies, any and all contingencies, including your loan. So what I try to encourage my clients to do, and I try to do, and if at all possible, is remove all contingencies except the loan. And whenever possible, we try to do that, and then we wait for the loan documents. Sometimes you have to remove the loan contingency, all contingencies, and put your deposit on the line. That will happen every once in a while. So during this contingency period, the 17 to 21 day contingency period, you have the right to cancel and get your deposit back without any troubles. So if you decide to cancel during this contingency period, upon signed mutual escrow cancellation instructions, escrow will cut you a check for your deposit and return it right back to you. After you remove all your contingencies, you're locked into the escrow and committed. So after you've removed all contingencies, at this point, you're now waiting for your loan docs. You're waiting for your loan approval. You probably have your loan approval by this time. So at this point, you're getting your loan approval, or you already have it already, and you're waiting for your pre-document conditions. All lenders have pre-doc conditions. So before you get your loan docs, you're going to be satisfying your lender conditions with your lender. Normally, the lender conditions involve them going over all your financial information, which consists of your W-2s, pay stubs, bank statements, tax returns. It's a lot of things. Also, it's contingent on the appraisal. The lender wants to see the property appraised at the full purchase price. So upon satisfying all the conditions, you're going to get loan docs. Loan docs will be sent to escrow, or you may be able to sign them at home in the presence of a mobile notary. That'll be your choice. You'll choose. When the time comes to get loan documents, you will decide or be offered the choice to sign them at escrow or at home with a mobile notary. So after you sign your loan docs, they get sent back to the lender, and then the lender reviews your loan docs, and then they'll have funding conditions. Funding conditions are similar to the pre-doc conditions. They review everything, and if they decide to double check any of your information, they may ask you for updated statements, updated W-2s, bank statements, check stubs, anything they feel is necessary to satisfy your funding conditions they feel is necessary. After that, after they approve of your funding conditions, the loan will fund. Normally the following day, on the day the loan funds, at that point, normally your escrow will close the following day after the loan funds. Unless it's on a weekend, like say a Friday, they won't fund your loan on a Friday most of the time because they don't want you to have to pay interest over the weekend. So in that case, they would wait till Monday and fund the loan on Monday and close on Tuesday. So after your loan funds, then it closes the following day, then escrow closes, it records a day after your loan funds. Escrow closes, they record it in your name on the title, and escrow is officially closed. I hope you enjoyed this video explanation of a home purchase and escrow process. If you have any questions, you're welcome to visit my website. My website will be in the at the bottom of the page, and in the signature column there, www.soldbylamontre.com. I specialize in residential real estate in the Torrance and South Bay area. And if you have any interest to do anything with real estate, you'd like help, you're welcome to contact me.